Many people think a country goes into debt simply because it spends more than it earns, but when you look closer, the truth is far more complicated. Almost every nation on earth carries debt, even the strongest economies. Some owe so much that the numbers start to feel meaningless, and yet the world keeps turning. Financial markets open every morning, governments take on new loans, and the system moves forward. So the real question isn't, why are countries in debt? But rather, who are they in debt to, and how does this system keep functioning? To understand that, you have to imagine the global economy as a massive network of agreements. Every loan, every bond, every government note is essentially a promise about the future, and governments rely on these promises to build roads, support people, stabilize currencies, and keep their economies alive during crises. Taxes alone are never enough. The rest is covered by borrowing. What most people want to know is this: who are countries actually indebted to? Surprisingly, the answer is often not distant nations or mysterious entities, but their own citizens. When you hear that the United States owes trillions of dollars, it sounds alarming, but most of that debt is held within the country itself, by pension funds, banks, insurance companies, and investment firms. In other words, people indirectly fund their own government. Japan is a similar story. It has one of the highest debt loads in the world, yet most of it is held by Japanese institutions and the Bank of Japan. At first it sounds strange. How can a country owe money to its own central bank? But in practice, it's like moving money from one pocket to another. The risk doesn't disappear, but it prevents the government from collapsing. So does that mean debt isn't a problem? Not exactly. Debt is a tool. When used wisely, it supports growth. When overused, it creates instability. Too much borrowing erodes investor confidence. Interest rates rise, payments increase, budgets tighten, and eventually the system becomes strained. Yet here's the paradox. Despite these risks, the global economy depends on debt. Without it, economies couldn't expand, companies couldn't grow, governments couldn't respond to emergencies. Modern life as we know it simply wouldn't exist. Debt isn't just tolerated, it's a foundational force. And nations don't rely solely on themselves. Foreign governments also invest in each other's debt. Japan, China, European countries, they all hold portions of one another's bonds. It's less of a rivalry and more of an interconnected financial ecosystem. For example, the U.S. owes far more to Japan than to China. Europe holds U.S. debt, and the U.S. holds theirs. It's a web, not a battle. Then there are central banks, maybe the most fascinating part of the system. Central banks can create money to buy government debt. This keeps interest rates low and stabilizes the economy. It doesn't mean countries can print endlessly, but it explains how some nations can sustain enormous levels of debt. All of this leads to a surprising conclusion. Global debt isn't just a list of numbers. It's a system built on trust. As long as people and institutions believe their governments will honor their promises, the system keeps going. But if that trust fades, everything becomes fragile. So when you hear that every country is in debt, don't assume it's a sign of collapse. Debt is a core feature of modern economies. The real danger isn't the debt itself. It's the loss of confidence in the future. As long as economies grow and people believe tomorrow will be more productive than today, the system holds. It's not perfect. Sometimes, it's even unsettling. But this is how the global economy survives. In a way, the entire structure of global debt rests on a shared belief held by billions of people. a delicate balance that keeps the modern world running.